Did I doubt whether or not I had my why in the right place? Was I risking the security of my family by being an entrepreneur? Those were tough thoughts that I had to overcome. But ultimately, I just clung to the idea that I would get there, and it would be the best for not only myself but my family, and also those people that I can now serve.
Hey, what's going on? It's Joel Irway here, and welcome to another very special episode of Experts Unleashed. Today, I am joined by my good friend and fellow trading expert, Brad Wachter from PaycheckTraders.com, and I am super, super excited to have him on the show here today. Now, Brad is an expert at helping people develop a consistent trading strategy that allows them to generate a livable paycheck, right? He calls it paycheck trader strategy, right? Paycheck trading. I'll have him go through his official, methodology in just a little bit. But I wanted to bring Brad on the show because number one, I've worked personally with Brad, so I wanted to make sure that I bring people on that I can put my stamp of approval on, that I can sign off on, and I can vouch for Brad. I'm a big advocate for his methodology, and I've known him for a number of years, and so I trust him, and so I wanted to bring him on and expose him to my audience and get his background, get his story, and get his methodology, because I do believe that while trading might not be for everybody, I think it is definitely something that a lot of people should consider as an opportunity to invest, an opportunity to generate income, because there are just hundreds and hundreds, if not thousands, of different ways that you can make money with trading. And I wanted to bring Brad on to talk about that. So, one of the things that Brad talks about is how he can help his students make a consistent $10,000 per month in profits using his methodology. So, with that big, bold promise out of the way, I wanted to bring Brad onto the show. So, Brad, welcome to Experts Unleashed, my man. Great to have you.
Hey, thank you, Joel. I'm super excited to be here. I've been a big fan of your podcast over the years, and it's a real treat now to be a guest on it. So thanks very much.
Brad, obviously, we go back a number of years. We've hung out in person. We've worked together. I've been a client of yours. You've been a client of mine. So there's mutual respect there. But for people who don't know who you are, give us a quick 30 to 60-second background of what you are, what your company does, and we'll start there.
So I like to say I'm not a guru, right? I mean, you'll find a lot of people out there that pretend to be gurus in the trading space. I'm just a regular guy that developed an interest in trading options, and I like to say I was too stubborn to quit. I just kept going, making mistakes, learning the ropes until I got good at it, and never really expected to be an options trading coach, to be honest with you. Had a corporate career, then I was an entrepreneur. I owned a business for a dozen years. And, what happened was I would start to show friends and family what I was able to do with options. And they're like, you really need to share this. You really need to make this into something because you could really help people. And they thought I'd be good at, coaching. And so anyways, eventually I took them up on that. And I'm really glad I did because I'm having a blast. I get to, at the same time I'm trading on my own account, show people what I'm doing, and they're making money. And I really love just being a small part of their success story. I've got all different kinds of members that I'll talk about later. But that's sort of what brought me here, is just someone that, didn't quit, learned how to get good at something, and then now I'm able to share it with other people.
Awesome. What I want to talk about first, Brad, is I always like to go back and if I'm somebody who is considering learning investing or considering trading or whatever, right? You put money into the stock market, you put money into some sort of market. As I mentioned before, there are literally probably hundreds of ways that you can make money with the stock market. Can you take us through a little bit of your background and your experience with different strategies and what ultimately led you to the current strategy that you call the paycheck trading strategy, right? So take us through the genesis of your experience with trading that led you to where we are here today.
Yeah, that's a great question, and I get that a lot. Investing is a huge topic, right? You can invest in stocks and crypto and real estate, and Uh, then even within options, there's a million ways to trade options. But over the years, what I've realized is what most people want as an outcome in their investing journey, and that is um, consistent income, right? I mean, it's one thing for us to save up for retirement and have a nest egg, and I'm a big advocate for that. But that sort of means that you're not going to get to spend that money for a long time. So with options trading, at least the way that I teach it, you can actually create an extra paycheck. That's why I call it the paycheck trading strategy. And that paycheck can be small, if your goals are fairly moderate, or it can literally be a full time income or more. And it's same strategy, just sort of, do you want to play a smaller or bigger game? So, what I teach is very specific. I don't try and be a generalist. I don't try and pretend that I'm going to teach you all different kinds of options trading strategies. I'm going to teach you one, and it's a good one, and it's probably all you'll ever need. But once you get good at it, if you want to expand and try different things, that's fine. But I really feel like it's my responsibility as a coach to keep people focused on one thing long enough so they're a master at it. And that's what we do with the paycheck trading strategy.
Okay, cool. So the paycheck trading strategy is about producing a potential full time income if they want, right? But it's meant to produce that it's meant to produce that income that will allow them to live their daily life, right? So we know it's options, right? We know that your strategy is options. What led you to options? Like why options over any of the other strategies that are out there in
Yeah,
investing?
so primarily because of leverage. Options allow us to control shares of stock in a very leveraged fashion. And so then what that means is that you don't have to have a very large trading account to make a meaningful income from trading options, at least in the way I teach it. So that's what I love about options. Now, if you do it wrong, you can get hurt. There's no doubt about it. And that's why options sometimes has a bad rap, is because if you're not careful, you can do a lot of damage to your account. But if you follow the rules that I teach, it's actually a very low risk type of trading strategy because we simply don't let ourselves to lose very much on any given trade. I'm just a big believer on it. I'll go through, how the trade works if you'd like me to, but I'm kind of known as someone that likes to give crazy guarantees. So I've got a guarantee right now that says I guarantee I can get you to 10,000 a month in trading profits, or you'll get your money back that you pay me to work with me. So I don't. I've never seen anyone doing what I do that offers something like that, and I can only offer that because I believe in what I'm doing so much.
Well, yeah, so for me, when when I started to really look at and do my own research in investing and trading, I discovered options and that was basically the same conclusion. Like, okay, I get that it's leverage, but leverage always, makes me a bit nervous. It's like, okay, you've got greater risk, greater exposure. So I guess let's walk through your trading setup so now we can get more comfortable with that risk looks. I'll say, and how we put those bumpers in place to say, okay, hey, we don't risk too much, so we don't completely expose ourselves, and let's learn how that translates into a substantial, a healthy, full
Yeah.
time income.
Okay. Absolutely. Well, let me run a few concepts by you, and then I'll get into how the trade itself works. So, one of the concepts is
Yeah.
called the velocity of money. I don't know if you've heard about that, but it's not only about options; it's about any kind of investing. But it's the idea that the quicker that you can deploy capital, get a return on that capital, and then take it back out, and then do it again. So you're recycling the same capital again and again, that creates this amazing compounding effect that really few other types of investments have. Now, with the paycheck trade, we're actually able to recycle our same capital up to 13 times per month. We generally do trades Monday, Wednesdays, and Fridays, and that works out to be a 13 or so in an average month. So that's a critical component of why what we do works so well, because of the compounding effect that comes from that velocity of money. Um,
Okay.
yeah, some other characteristics about it. The way we set up this trade, first of all, it's very rules based, right? This is not something where I expect my members to like learn how to research. You don't have to learn charting. You don't have to apply indicators. This is almost like following a recipe. And if you learn the recipe and you follow it like I teach you, some pretty amazing things will happen. One of those things is we can expect to have about an 80% probability of winning that trade, which is quite good. But then coupled with that is something called a 1-to-1 reward to risk ratio. And that's a fancy way of saying that we will not allow ourselves to lose any more than we were expecting to win on that given trade. So when you have a high probability of winning and a 1-to-1 reward to risk ratio, then that creates a very favorable what's called positive expectancy. In other words, you can almost kind of forecast out in the future what at any given trading size you might expect to earn from this strategy, which is super cool. I mean, it makes people comfortable with doing this kind of trading because it is so predictable. A few more things about our trade. It's very low time commitment. So we place these trades generally 15 minutes or so after the market opens on Monday, Wednesdays, and Fridays. We set a stop loss so that while we're, not paying attention to the trade, right? And I don't want you to sit in front of your computer all day. I want you to take a couple of minutes in the morning, 3 days a week, place the trade, set your protections, and then come back to that a few minutes before the market closes that same day and harvest your profit or your paycheck. I mean, that's why it's called a paycheck trade, because we're actually trying to create up to 13 paychecks per month. So that's you got the high win rate, the good risk control. It doesn't take very much time, and then it's just a matter of again knowing how to go in and set the trade up. And by the way, we don't trade options on individual stocks even. So I like to eliminate stock specific risk. We only trade on the market indices, typically the S&P. So we'll use the ETF product SPY or the index itself, SPX, or we'll use the equivalent on the NASDAQ or the Russell 2000. And so we get some safety from going with a very diversified product like that. And we don't have the stock specific risk. And the other reason why we use those indices is they happen to have, and this is getting a little bit into the weeds, I apologize, but just so happens that they have more frequent options expiration cycles, which we actually use to create that velocity of money.
Got it. And that was one of the things. That was one of the things that I learned about when I worked with you was options expire. Correct me if I'm wrong, and I'm going off of memory. But options expire Monday, Wednesday, and Friday. Is that why we only trade Monday, Wednesday, and Friday? Is
Well,
that
on
when? Is
the
that correct?
indexes, they expire that often. Most single stocks, you'll only have a Friday expiration, or perhaps even monthly. And so, if you think about it, based on what I said about the velocity of money, you don't want to wait that long for your trade to have an outcome. You want to get your capital back and redeploy it. And so that's why the frequency of options expirations is so important. It's almost like I like referring to it as a money machine. I mean, we're trying to pull money out of the market frequently, and that's what we can do. In fact, I'm in a trade right now. We put on, I guess, let's see, it's about 3 hours old, and we're up 5% on my trade size. But important thing to understand about how these trades are structured is although we can make 10 to 15% on trade size in a 1 day trade, uh, our trade size is not our risk. We're only risking about 10% of the capital that we're deploying to make this trade. And that's part of, the safety factor of getting this to work so well.
So what I want to do real quick is I was taking notes and I want to recap this for everybody listening right now so they can in their mind they can kind of have the highlight benefits of like what your strategy talks about. So number one is it's got an 80% win rate, which I think is pretty incredible. And I want to ask you about that in just a little bit, but after I do this recap, right? So we have an 80% win rate, which is fantastic. You have a risk control of a 1-to-1 reward to risk ratio. So you're only going to lose as much as you could potentially win. And if you're winning 80% of the time, that means you're going to be greatly ahead in the long run, right? And so you're not leveraging, you're not risking a tons, which would wipe out, weeks worth of profits. If you do take a big loss, you're wiping out one
Hmm.
win, right? Did I understand that
Yes.
correctly?
Yeah. So
Yep. So one loss really only wipes out
that's right.
one
Or
win.
another way of saying that is you can make up that loss in the very next winning trade.
Yep. Perfect. We're only trading 3 days a week, at max, right? 3 days a week, Monday, Wednesday, Friday. That's when these options expire. That's when these option trades are in play. So it's only going to require about 15 minutes on those trading days. So that's 15 minutes, 3 days a
Well, it's
week,
actually better
right?
than that.
15 minutes a
It's
day,
it's
three.
actually 15 minutes for the whole week. Um,
Oh,
I mean, it sounds too good to be true, I know, but really, once you get good at this, it's about 2 minutes to place the trade and 2 minutes to take it off. So it's only 15 minutes a week. Now I'm not saying that people are curious; they might want to check in on the trade, see how it's doing. I mean, I'm always glancing at my phone to see how much I'm up, but technically, the trading itself is that little time, which really the implication of that is it can be done by almost anyone. I mean, I've
yep.
got truck drivers that trade this. I've got people that work full time, like in environments where you wouldn't consider them having a lot of flexibility. Like maybe working in a hospital. But then I got a lot of people that have more flexibility in their schedule. Entrepreneurs, retired folks, etc. But almost everyone, can find those few minutes, 3 days a week to trade this.
And so the last thing that I wanted to highlight is, you set a stop. So you say you start the trade a few minutes after the opening
Yeah.
bell, and then you come back and you collect the paycheck a few minutes before they close the
Yes.
bell. Now, is there a reason why you don't just let that self expire at the end of the day, and why you come back and manually close
Yeah,
it
good
down?
question. There is a very good reason why. So, and I don't want to get too technical here, but this is a trade that has multiple legs to it, where we're actually selling some options that are going to expire that very day, and then we're buying some options that are further out in time. And so the reason why we want to shut the trade down at the end of the day that we're trading it is that those what we call long options, or the ones that we're buying, we don't want them to further decay in value in the overnight hours or the next day, because they would have already served their purpose for us. The purpose of those is to protect us from loss. And so as soon as we're done using the options that we've sold, which hopefully will have gone to zero by the end of the day, and that's where we capture our money from. We want to then not let the other options lose any more value than they already have, and that's why we shut it down manually.
Interesting. Okay, cool. So that's good to know. So, all right, so I need to make sure that I'm, around to be able to open and close these trades, start of the day, end of the day, which is fine. I think it's just very important to kind of prep myself and understand where I need to be to make this
Yeah,
work.
and just one more point about that. I mean, it's not to say you have to do this 3 days a week. I mean, if you're going to have a busy afternoon and you don't think that you can get back to the trade, then just don't trade that day, or shut the trade down for a partial profit, midday before your schedule gets busy. So it's very flexible in that regard. In
Yep.
fact, we can even set up a profit target auto close so that your trade shuts down automatically when you reach a certain profit. Now, I generally don't do that personally, because you're not maximizing your profitability by which takes the waiting till the end of the day. But there's certain cases where you may just want to shut it down for a partial profit.
So you can put in automated rules to close it down if you know you're not going to be
Yeah,
there at the end of the day. Like, okay, cool, I'll open this, but you know, I'll minimize my profit risk so I can take advantage of the automated
Yeah.
rules, right? If I'm not
So
going
we
to be there.
always have an automated stop loss order, but we sometimes have a profit
Right.
target order.
So the what I wanted to ask you is the 80% win rate, right? That's pretty incredible, right? Like, how is it that we can do that? Like, how is it that we can have an 80% win rate? Like, I don't know if I'm asking this question properly or not, but um, I guess let me just, how can we get an
Yeah.
80% win rate? Let me just ask the plain
No,
question.
it is extraordinary. So let me answer a couple of things about that. First of all, not only do we get that as an average, but we can also see before we press go on any trade, we can know three things: the probability it's going to win, our max profit, and our max loss. And so that's actually a very comfortable feeling to know those three things before you even enter into an investment. But to your point about how is it possible to get 80%, it all comes down to how I put these pieces together. So, what I like to say is there's really not a lot in any different piece of this trade that is unique to me, but how I've calibrated it, I put the pieces in order. In other words, the days of the week we trade, the underlyings we trade at, the times that we open and close, how we set our stops. Um, the just how the expirations we use, the strikes that we use, and I know these are technical terms that you people wouldn't know if
Yeah,
they haven't traded, but all those there's probably about a dozen different components, and what I've done is I've calibrated them such that they give us such a good and consistent outcome. Um, and it took me a long time to get here. Right, I traded lesser strategies, but I think that you know it's just that I like I said I'm too stubborn to quit, and I finally figured this out. It works really well, and now I really have a lot of fun sharing with others. But let me make a point about these technical terms that I've been throwing around. Um, you absolutely do not have to have experience trading options to make something like this work well. In fact, I often tell people it's probably better if you don't have experience, because usually what that means is that you've accumulated a lot of bad habits. Then if you work with me,
the curse of
yeah, you're going to
knowledge.
have to reverse those, and that's going to take time. And this is not something that like you have to have years of experience to start with. If you can just follow the set of rules, learn some basic terms, and then do it with repetition, first by paper trading before you even risk any money, you can get really good at this. And so I just want to make that point because I know that some people can get really intimidated by options with all these terms, and just like anything else, I mean, it has its own set of terms or language, but it's really quite simple when it comes down to it. And just one other point on that, the only two sort of situations where someone might not do well with this strategy is one, someone that is just too fearful. And what I mean by that is that someone that can't wrap their head around the fact that the occasional loss is just inherent in any trading strategy. And then the other is a person that just isn't really good at rule following. Um, Believe it or not, there's folks out there that just can't leave well enough alone, and they like to get creative. And so if they end up changing the rules, then it's hard for me to help them be successful. So those are the two things that are sort of the major obstacles to being successful in this. And I try and make sure that people don't have those traits, but sometimes it's hard.
Yeah. Yeah, I call that the curse of knowledge of when you come in with prior experience of something you think you know better. It's like, "Oh, okay, cool. Well, I understand your system, but like I'm going to now label, tack in my quote unquote expertise and try and modify it a little bit." It's like, "No, pump the brakes. You invested in this for a reason. Like follow the rules, follow the system, right? Follow the plan." Um, one of the things I want to ask you is, you know, with trading, like today, we're actually recording this on a very, very volatile day in the market. Today is June 13th, 2022, and like right now the market's like completely capitulating, right? So does this work for any market condition? Is it is it market agnostic? I mean, is it bull favored, bear favored? Like how does it not matter what the market is
Yeah,
doing?
it almost does not matter. Now, it's funny that we're recording this. Last Friday, I actually decided not to place a trade. Um, and I know this is going to be an evergreen podcast, so I won't talk about dates or anything. But there was some really bad inflation news that came out before the market opened last Friday, and it actually dropped 2%. The market did in the hour before the opening bell. So I, out of an abundance of caution, decided not to trade this that day. Friday ended up, it would have been one of our best trades. I would have made 14% of my trade size on Friday's trade. So it just goes to show you that it's important not to sort of second guess yourself. I'm okay with being cautious once in a while when you've got major market news like that. But this thing is, it's actually self adjusting, believe it or not. So it's a non directional trade. When we put this thing on, what we're trying to do is get our underlying, like SPY, for example, in the middle of a wide range to where that price of SPY can move up and down and we'll still have a winning trade. So, for example, today's trade, that's actually a $15 price swing. So on SPX, given where it's currently trading, that's like 3.5% movement, some maybe 4%, something like that.
Mhm.
So, and then when the market is more volatile, our break-even points actually automatically expand. So it almost, because if you think about it, what the markets are is they have to match risk and reward. So if then they need to get people to still trade in volatile markets, and so they need to give an incentive for that. And with the way our trade is structured, we have a widening of our break-even points during times of higher volatility. Then when volatility is lower, our break-even points narrow, but that's okay because we wouldn't then expect the big price swings that you get in days like this.
So, because I know a bit about your strategy, Brad, I want to kind of break it down a little bit into layman's terms, a bit more, so people kind of comprehend. And I want you to correct me if I'm wrong, but I'm going to try and relay this in what I think is actually happening. So, with your strategy, you're placing bets on the market going up, and you're placing bets on the market going down, and so that creates this kind of gap and this spread, which is why it gives you a big buffer zone. Is that correct?
Yeah, that's true. Another way of saying that is it's a non-directional trade that we really don't
Right.
care if the market is up or down, just so it's not up or down too much in one day.
Right, and that's what I was explaining. Like when you were saying non-directional, some people might not really understand what that means. It's because you're placing bets that it goes up, and you're placing bets that it goes down. So you have this giant spread of basically you just want the market to be anywhere in between that up and down range, and if it stays within a certain range of that up and down swing, then you win. And so that was me trying to describe what non-directional means, which is why we don't really care if like we're not placing bets that the market goes up. We're not placing bets that the market goes down. In fact, we're going to place bets that both happen and then we win when it stays in
Yeah.
a range. And so it's kind of like range-free trading
Well,
or range trading, I
no, I
guess.
think you
Yeah.
described that well. And the reason why that's so cool, in my opinion, is that if you have to try and predict direction, then a whole lot of things can go wrong, right? I mean, and do that successfully, right, by charting and using indicators, and I've done that myself, but it's a whole lot easier to place a trade where you're just sort of following the rules and then you're letting the odds take care of themselves rather than trying to have a prediction about market direction. And especially when you're a beginner trader, because um, it's a whole lot easier to just sort of following a step-by-step formula rather than learning those, sort of more advanced skills of predicting market direction, even in the short term, right? I mean, nobody can predict market direction over a long period of time, in my opinion. But the people that try and do that are usually just taking little time segments and trying to say, okay, over the next half hour, I think the stock is going up, and that's enough with options to create a nice profit.
Yeah, I love it. So you threw out some numbers earlier, and I want to make sure that people who are listening right now understand and understand the expectations. You said, you didn't trade last Friday, but it would have been like one of the best trades in quite a long time with around a 15% win, right? Or 15%
Yeah.
gain. Is that correct?
Yes.
So what is it that we shoot for on an average trade? Like if we're going to win 80% of the time, like what's our average? Are we shooting for 10% gain, or do we not really care? Is it just going to be a balancing average? Like, you know, what are we shooting for in terms of a gain on our
Yeah, I'd
trade?
say the long term numbers are probably shake out to be about a 7% return on trade size per trade. And another way of looking at that is a winning trade is anywhere from, break even, not losing a dollar, to about a 15% return in one day. So, take an average of that, 7.5%. Now, again, so let's just say that your trade size is $10,000, and you don't have to trade that large, right? You can start with this strategy with as little as $1,000. But let's just say you're doing 10,000. So on that 1 day trade, that 10,000 could possibly make you up to 1,500 bucks, 15%. But you're not risking 10,000 on that trade because of the way we set our stops. The most you could lose is 1,000 or 10% generally. Um, so that's why when we know the probabilities up front, we know our risk and we know our max profit, we just need to keep doing it again and again and letting the odds play themselves out.
Got it. Okay. So shoot for an average, on average over the lifetime, around 7%. 7 to 10% is what it shakes out to be. Makes
Per
total
trade.
sense.
We hope to do that 13 times per
Yep.
month. Yeah.
Right. Per trade.
Yeah.
Per
So
trade.
it's, I mean,
All
sometimes
right.
people like find it hard to believe, like, wait a minute, 7%. I'm happy in a year if I get 7% on my assets. Well, that's the crazy options. You can actually get that on a routine basis.
So this is fantastic. Like this is why I get excited, right? Is because it's simple, it makes sense, and there's a rule-based system where you're not going to get killed. Like you're not going to, like your risk is completely mitigated. Like that's as Warren Buffett, like that's the ultimate rule of make money. Rule number one, don't lose money. Rule number two, see rule number one, right? It makes total sense. So out of curiosity, Brad, like I want to kind of go backwards a little bit, and like I would love to hear a little bit about your journey of like all the things that you tried. Like you talked about it, like you just didn't give up, meaning like you followed this system. You picked a, you saw, okay, well this worked here but this didn't work, and so like you modified it, you modified it, you modified it, you modified it. Can you take me through that starting journey for somebody who's listening right now and still may be a little bit skeptical? Like, I want them to understand, like, what are all the things that you tried and failed that helped you modify and tweak the system so now it's this bulletproof thing that you've ultimately come up with. Like, it's always great to hear that journey story so people understand, like, what are the iterations that it had to go through to get to where we are
Yeah.
today.
No, thank you. So first of all, I don't think I mentioned, but in my corporate career, I did work for one of the largest investment companies in the world, UBS Global Asset Management. UBS is a Swiss bank, but I was not a trader for them. I didn't manage money for them. I was on the operations side, but that's what piqued my interest in the markets in general. And then I just sort of over a number of years made a self study out of it. And yeah, to your point, I tried everything. I mean, I tried well generally within options, but I've done swing trading. That's where you hold a trade for longer periods of time, and you are using kind of charting and indicators to suggest when that stock is at a low point or a high point. I've done short term trend trading where You sort of focus on the opening 30 minutes of the market, and you use indicators to pick a likely direction. And you're either buying a put or a call to capitalize on that short term movement. I've tried different credit spreads and debit spread. I mean, any kind of and again, these are technical terms, but you open up any trading platform, there's about a dozen different trade names, right? And I trade all of them. I tried all of them while I was educating myself, right? So um, people that join my group, a lot of times they're this is sort of an aside, but I'll get back to your point. Uh, they're understandably skeptical because there's a lot of people that do what I do that will not deliver on their promises. Um, well, I used to hire those people, right? I mean, I bought the courses, I hired the coaches, and so I'm very sensitive to the fact that I need to deliver on my promises because so many people don't. But to your point, yeah, I you name it, and I traded it. What I've not done, I didn't do crypto. I always stayed away from crypto. Just trading stocks was a little boring for me because that tends to be a slower game. But just about everything in options, and then just slowly, I developed the pieces, piece by piece, tested it, tried it with my own money, a lot of experimentation before I was comfortable to actually, expect others to follow my lead. And
Okay, I want to jump in, Brad, and I want to actually see if I can press you for a little more information. It's like what did you try in options? Like if somebody's already kind of familiar with options and they're interested in your option strategy, like what are one or two other option strategies that you tried, and what are some of the holes within those systems that ultimately led you to develop what you got here today?
yeah, well, it all comes, and I'll answer that specifically, but it all comes down to win rate and reward risk. So you can have a strategy that, for example, wins 90% of the time. A lot of your credit spread strategies, if you set up a credit spread far out of the money, you could probably win 9 out of 10. Problem is, when you lose, you're losing an outside amount of money, right? You're losing much more than a 1-to-1 ratio. So a lot of people get sucked into that idea of what they call selling premium, using a credit spread that's placed in a safe position because it wins a lot, but then they just get crushed when they lose. So that's why I don't like those kinds of strategies. I've traded strangles and straddles where you're sort of on both sides of the price of an underlying, but those can have very poor win rates, right? Things have to happen just so in order for you to profit with those. And then I traded a lot of longer term strategies. So, like, um, I used to think, okay, I need to be in this trade for a week or many weeks in order to get a decent monthly return. What I learned from that, though, is that's contrary to the velocity of money. If I have to wait a week or two to make a profit or find out that I lost, then it's going to take me a week or two at minimum to make that money back. And that's why I'm just such a huge fan of the cycle of what we do, because you suffer a loss, and then next trading day you make it back, and you're back to where you were without ever having a big drawdown in your account.
Now that's a key point then right there. That's where it kind of is the aha moment for me, right? Because you talked about the velocity of money before, and I kind of got it, but now I understand why it's so important to relate that to this strategy is because of all the other stuff that you've tried before. Like, okay, I might take a longer term strategy where it's a 1 week to 2 week payoff, but guess what? If I lose, that means I have a 1 to 2 week time frame of me needing to regain that. So now that makes sense. So like now it's like, okay, cool. Well, now I understand why why the velocity of money is so important with our strategies, because sometimes we can't afford that. Like I can't do a paycheck strategy if I have to wait 2 more weeks to potentially recoup my gains, right? I don't mind risking one paycheck if I know, like, I don't mind risking one paycheck if I lose, if I know that the very next time, like, I'll win it back, and which is going to be in 2 days from now, right? Monday to Wednesday, Friday, right? It's every other day. 3 out of 5 trading days, right? So
Well, and other than profitability, what's so important about that concept is that trading is as much about mindset as it is about the mechanics of your trade, right? And so, what's so cool about maintaining a one-to-one reward to risk and the frequency in which we trade is that it's very hard to get discouraged because when we do have a loss, we know we're going to bounce back right away. And so, especially when you're a newer trader and you haven't developed sort of the strong trader's mindset, uh, it'll get you to the point where your confidence will be built, your comfort level, and then you can sustain higher and higher losses. And what I mean by that is that it's all proportional. So if I'm trading at $1,000 size, I might lose $50, right? Pretty easy to handle that. If I'm trading at 20,000, I might lose 2,000 maximum in a trade, but I could also make 2,000. So over time, as you do this, what uh, I call it, what is your ruin your day number, right? What is that number that should you have lost it that day, it's going to ruin your day. If you suffer a ruin your day loss, then you're trading too large because you haven't yet developed the confidence, the comfort, and the mindset to be able to brush that off as just part of the process. And that's so
yep,
that mindset is critical to what we do.
I love it, man. And that kind of ties us all together for me, right? Because there's anytime you deal with money, I don't care if you're trading, I don't care if you're building a business, I don't care if you're in marketing, like anytime that you deal with money, now you're messing with your head. And you have to have the confidence in being able to do it. And so, like, probably all smart investors, you're probably going to say start small until you can build that confidence. That's why they say it. Start small until you can build that confidence. Stay away from that ruin your day number, right? Because losses are inevitable, meaning like, it's going to happen. Like the day is going to happen where your trade loses, and you have to be okay at home mentally, emotionally, and stably to deal with that.
All right, because otherwise you're going to stop trading, and that's not good, right? But that, yeah, and in order to make this a long-term, extra income, full-time income, whatever, you've got to keep that mindset in check. And following the rules will help you do that because I teach people just how to gradually increase their trade size when they're able to handle it, not only financially but also mentally.
Well, Brad, we're going to get to part 2 of this interview in just a second, but I want to make sure that people who are listening right now understand that Brad has a fantastic system and a fantastic guarantee. Where Brad, go ahead and repeat your guarantee. I want to make sure I'm not repeating it for you. So, what is your guarantee if somebody comes and works with you and follows your
Yeah,
system?
so with the paycheck trade, which again is step by step rules for a strategy of trading options that can allow consistent profits, high probability of winning, good risk control. Um, I'll actually guarantee that I can get you to 10,000 a month in trading profits, and I'll work with you until that happens. So even if you want to start out with fairly small dollars, as long as you can commit to me that you're in this for the long haul, we'll work together until you get to 10K a month in trading profits. So that's the guarantee. If you don't get there, but you can prove to me that you follow the rules and that you're trading consistently, I'll give you your money back.
Yep. That's fantastic, man. It's a completely risk-free, no-brainer offer, and you can head over to paychecktraders.com to learn more about working with Brad and following his paycheck trading system. And that's just a rock solid guarantee. I mean, it sells itself, but hopefully you guys have learned a little bit more about his system and have trusted in Brad himself as an expert, as a leader, which is my whole goal for bringing people onto this podcast, is to build that trust factor and get people to understand, okay, this system operates this way. I can trust this guy. You know, let's see about taking the next step. All right, so Brad, I want to get to part 2 of this interview, which we call the expert resilience section. And so I want to ask you a couple of questions about how you perform as an expert, right? So how you performed in growing your career, in developing your career, and the mindset that you've had to that you've had to build in order to overcome different obstacles and accelerate your career as somebody who teaches others and who leads others in your system. So, the first question that I have for you is, to be as successful as you are, you've probably had to bounce back from a low moment. So, can you take a minute to share with us a down moment in your life and how you practiced
Yeah.
resilience?
So my lowest low came in 2008, June of 2008. And within the span of a few months, I was fired from my corporate job. My mom died. And I spent about $250,000 on a business, and I lost that in very quick order. I had no business buying the business that I did, didn't think it through, huge mistake. And so that left me at what was at the time, and still to this day, my lowest low. That was also the start of my entrepreneurial journey. So, there's a lot of good that came from that, which I believe, in the concept of but for not that happening, you wouldn't be who you are, where you are, etc.
Well, so what happened? I mean, you bought a business that failed. What was the business? And I guess, like, what was the business and what made you jump to give that a shot?
Well, at that time, I had wanted to get out of corporate. I had the freedom dream, right? I wanted to, you call it living the semi-retired lifestyle, right? That was my dream, and but I didn't have a plan to get there. Well, by being fired, I was forced into action, right? So when you're forced into action, that could be good because you've got to come up with something, but it could be bad because if you don't have a good plan, then you might be in trouble. So uh, I um, I was interested in the online world. I wanted something that sort of was tied into my corporate experience. So I actually bought, believe it or not, an existing online job board, one of these places where people post jobs in a certain industry niche. I mean, we all are familiar with the big ones, right? Like Monster and Career Builder, right? But there are a million little small ones that serve basic niches, either by industry or professional type. And I bought one, and um, but I didn't know anything about running an online job board, right? I thought I did because I kind of could understand the customer, like who was paying for these things, the corporate hiring managers or whatnot that would invest in these job postings. But I was totally out of my league, um, and I ended up realizing that fairly quickly and selling that back to someone that owned a number of other job boards that they had been, doing well with. But I sold it for pennies on the dollar. And then the situation I was in is I basically, spent what savings I had to that point in life. And I'm like, like I'm still committed to being an entrepreneur, but now I need to find something that requires very little capital because I don't have any left. And that's what sort of sent me on, the journey that's now been 14 odd years in the making. Not always in trading. I've been coaching people for a number of years and trading myself for, 15 odd years, but I had other entrepreneurial journeys before I ended up with Paycheck Traders.
So I guess, how would you say that experience helped you practice the art of resilience?
Yeah. So, just getting up, putting one foot in front of the other, knowing that I didn't have any backstop anymore, right? I mean, I'm kind of a big believer in pulling the ripcord in life. A lot of people just never get to where they want to go because they never let go of what they have now, right? The golden handcuffs or whatever you want to call that. So I guess that fits in the resilience because I'm someone that is a little bit too stubborn to quit. But then when you're in that situation that I was in, like you can't quit, right? You got a family, you got bills to pay. So you better figure it out and you better do it quickly. Um, and fortunately, I was able to eventually turn around. Can't say it was quick, but it happened, and the best thing that ever happened to me. So, looking back on it, thank you for that person that fired me. Thank you for making that mistake of buying that business that failed, because it set the time clock that I got on that eventually led me to, my lifestyle now.
I love it, dude. And so many people can relate to that story because there's almost always a trigger moment in any entrepreneur's journey of like something bad happened, but we turned that bad into a positive, or something unexpected happened and, our back was up against you know, the door, our back was up against the wall, and we could only move forward because we've fallen as far back as we possibly could. And so I love hearing those stories, those moments of like, oh, well, a company collapsed, or I got fired, or I invested $1 million into a project that completely bombed, and well, now I'm $1 million in debt. And so like the only way I can go is up because I'm so far down below that like I can't fall any further back below. So I love it, man. All right. Second question. Now, if you had to pick one, what one mindset would you say has meant the most to you? And can you share an example of how that works?
Yeah, I guess for me it's just the idea of don't quit. Like, that's, if I have a mantra. In fact, I do have a mantra. If I can remember it, I think there's a poem that I had memorized. Let me see if I can do it. So when things go wrong, as they sometimes will, when the road you're trudging seems all uphill, when care is pressing you down a bit, don't worry, just don't quit. Right. So I keep going. Things go wrong, as they sometimes will. Okay, I got through that. I don't know the rest of it, but anyways, there was a while where I was saying that to myself a lot. So yeah, I mean, it's as simple as that, right? I mean, if you look at, I think people overestimate what they can accomplish in a short period of time, and they underestimate what they accomplish over a longer period of time. And if you just stay in the game, you're probably going to get there. So that would be, my resilience mindset in a nutshell.
I'm time in the game, man. It's the most valuable resource that anybody can consistently deposit into their bank account because time will compound everything. Money will follow, but time is your compounding factor. So I'm a huge, huge advocate in that. Love it. All right. Next question. What is something that you or your company does that you are really good at? And do you have a story about that?
Well, I mean, I guess, you know, creating the paycheck trade and um, teaching people that, such that they can change their life, is, that's my why, and that's what I'm good at. Right, I'm good at uh, analyzing things, putting things together to produce a useful product. And so, um, what I have now in the paycheck trade, which is what my company is based on, is something that could help a person with a more abundant retirement. It could allow a person to leave the corporate world like I did and create a full time income. I've got a guy that wants to retire to Italy. That's his dream. Truckers that want to get off the road. You name it. I got a pastor that doesn't make too much money in his church income, and he supplements it with the paycheck trade. So that's what I'm good at. I'm good at communicating something that I've created, that I built, in a way that people can understand it and apply it, and it creates life change for them.
Love it, dude. All right. So, final question as we wrap up the expert resilience section. What is your why? What gets you out of bed every day to strive for excellence? And can you tell us a story of how that played out in real life?
Yeah, so my why is two part, and I've kind of mentioned the client side, right? Like, I get a real kick out of being a small part of their success and what they can do with that extra income. But the other part of my why is more personal. I'm a big believer in freedom. I never fit well in the corporate world because I didn't want people telling me what to do and going to meetings that were didn't have to go, unproductive, etc. And so, to have created for what is for me sort of the perfect lifestyle, and to have me be almost infinitely available to my kids as they're growing up, for all their activities and to produce a good income to give them a lifestyle. That's the personal side of my why. So, the personal why, and then what I do for people is the other part of my why.
So, is there any specific story that comes to mind where you've had to really dig deep and kind of remind yourself about that why to give yourself that drive, give yourself that motivation when that might be lacking on a certain day or certain time in your life?
Well, and, things weren't always going so well, right? So after that big financial loss, did it cross my mind that the best way to take care of my family would be go back to corporate? Or, during my entrepreneurial journey where things weren't going as well, did I doubt whether or not I had my why in the right place? Was I risking the security of my family by being an entrepreneur? Those were tough thoughts that I had to overcome. But ultimately, I just clung to the idea that I would get there, and it would be the best for not only myself but my family, and also those people that I can now serve.
Love it, dude. Well, Brad, it's been an honor to have you back on the show. Well, not back on the show, but it's an honor to chat with you again. I know we chat regularly every now and then. But if you're considering getting into, if you're considering following Brad's strategy of the paycheck trading system, look no further than following Brad, because Brad has a ridiculous rock solid guarantee. He'll help get to $10,000 per month in trading profits, or you don't pay. I mean, I don't know of anybody else who has that type of guarantee with their system. It's absolutely fantastic. Hopefully, you've learned enough about Brad that you know he's true to his word. He's a man of integrity. He's a man of honor. I know there's lots of people that you can follow in the trading space, and hopefully Brad's message resonates with you from a personality standpoint, from just the type of person that he is, and hopefully this methodology makes sense to you. Understand that he puts bumpers in place to where you're only risking so much in order to get that reward, and hopefully it makes sense to you. But if not, that's why you can reach out to Brad. You can contact him over at Paycheck. I want to make sure I get the URL correct, paychecktraders.com. And Brad, anything else before we wrap up? Any parting thoughts? Any parting words?
Just it was kind of the theme of this interview, just resilience. So whatever your dream is in the world, just go for it. Don't quit. Go after it. If 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 I can help you with that, I'd be happy to. But whatever it is that you want to do, just follow Joel's lead and just go for it.
I love it. All right. So if you're interested, go to paychecktraders.com. Brad, it's been an honor. It's been a pleasure. Thanks for reconnecting. And for all of you, we'll see you on the next episode. Take care.